people mistrust the financial industry in a big way.
I think a great way to do it is through education rather than through selling.
I believe every individual in the universe needs to have a term life insurance.
You can see people driving fancy cars on the road, but when I found out that that person's actually broke and is living on from his credit card.
Insurance is, I believe, the only category where the manufacturer, the distributor and the consumer, nobody wants anybody to use the product.
So basically what the CEO of policybazaar.ae is saying is follow your financial wingman. Alright, hey guys, this is your financial wingman, and as we try to navigate the confusing world of finance, I today have brought into the studio my financial wingman for today, Mr. Neeraj Gupta, who is the CEO of policybazaar.ae, where we're going to really try and dig deep into the world of insurance, investments, living in Dubai, investing, etc. Mr. Neeraj, thank you so much for being here. Welcome. Welcome to the Financial Wingman Show.
Thank you. Thank you so much for having me here. It's my pleasure.
Actually, before we get into it, I want to ask you, what gets you out of bed every day? What's your mission? What's your vision in life? Why are you here today?
So, okay. Our mission has been very simple, and my mission has been very simple since I got associated with Policy Bazaar. I understood the nuances of insurance and financial world, right? What we want is more and more people to get into it, into the financial well-being, good financial habits. And our objective is simple, that you don't need to buy through us. But what we want to educate you, and you buy from anywhere you want. But just get an understanding on this, and I believe that is what our mission is, and what my mission is, to secure a lot more people, and that is what gets me up.
Amazing. So when you say secure a lot more people and build the right financial habits, what do you think is the biggest problem or the biggest challenge that people are facing today, and that you're trying to solve?
Yeah, if you look at it, everything in hindsight looks very easy and good, right? I believe the biggest problem is procrastination in financial world, right? Because people don't understand the power of multiplying, don't understand the power of exponential things happening, right? And you look at a very small thing, like in the very near future, you say, okay, I'll get a return of probably 8-10% every year, and you're like, okay, I put in 10,000 and I get 1,000 every year. It doesn't look good, right?
True.
But it compounds. And that is where the people don't understand patience. So I believe people do not have enough patience. And the other piece is that everybody thinks that I'll do this tomorrow. Procrastinate. I believe if you're able to solve these two, I believe people will get into it.
Absolutely. And this compounding, this exponential growth, even though it's such a simple concept, it's one of the most difficult ones to actually get to the bottom of. And I think people are looking for that end result without having to go through the
Exactly.
steps.
You have to do that small steps, right? And I believe we ourselves as a financial industry is also to be blamed for this. Why? People mistrust the financial industry in a big way. Let's be very honest on that.
I was going to come to that, but I'll let you carry on.
Because obviously there have been certain elements who have really taken the consumer for a ride, right? So now whatever advice a financial planner gives you or a financial advisor gives you, you take with a pinch of salt. Oh, he's talking about exponential growth, compounding growth. That's not going to happen with me. Probably 1% of the customers are going to have that. So I believe we are ourselves also to be blamed from a mistrust built over the years in this industry. And I believe we are also trying to solve for that. That is where we try and bring in a lot more transparency for the consumer. See, if you're transparent, I believe we'll be able to, in the long run, solve for it.
Sure. And I think a great way to do it is through education rather than through selling, which is why I think we're here to create that level of education to help people actually get to the bottom of it, because most people spend their entire lives trying to figure out money. Right?
Totally.
And being in the industry, yourself and me just being an enthusiast and someone who's trying to make a small difference, I think that's our role, to educate people so that they get it. Right? They get it. We were not taught this stuff in school. We never had a single subject on money. We had history, geography, civics, biology, and all this other stuff. Not one subject of how to be a millionaire or money. Just a subject called money. Right? If we had 30 hours in our entire childhood,
everybody would have a life.
Life would have been a different place.
Totally.
So we're in Dubai, right? A lot of our Indian brothers, sisters, a lot of expats come here, but not everyone is able to retire in this place. Not everyone's able to. Everyone comes with the lure of what Dubai has to offer, but mostly, as we've seen around, people end up leaving खाली हाथ आए थे हम,
खाली
हाथ जाएंगे. How do we solve for this? What's the challenge? Such a beautiful city, full of opportunity. One of the most innovative and successful visionary leaders. What a beautiful city. What's the problem?
So the problem is, I believe we get driven by what is happening around us. And a lot of financial decisions get taken by what somebody else is doing, right? So if you talk about anything in financial world, right, majority of the success stories gets the limelight, right? Failures do not get the limelight. So what I keep on telling my friends or people I speak to, I keep on telling there is no one solution which fits all from a financial planning perspective, right?
True.
Whatever makes sense to you, do that. If for you real estate makes sense, you understand that, please do that. But if somebody has made money in real estate, don't think you also want to get into it and make money on that.
Absolutely.
So I believe a lot of people, specifically in Dubai, when they come, obviously it's a land of opportunities, and especially people coming from a Southeast Asia perspective or Asian subcontinent, they see all the pomp and show in this market, right? And you suddenly have opportunities to spend money on probably you did not have earlier.
True.
Like I keep on telling people that affordability becomes easier here because, for example, you were earning 1 lakh rupees in India and the iPhone costs you 1 lakh rupees.
Correct.
Simple. Now here, you're probably earning 2 lakh rupees. The iPhone still costs you about 90,000 rupees. So your affordability to an income obviously improves. And as a result, you get into that rat race or a cyclic thing where you start piling on your expenses, right? Without figuring out you need to save. So for example, I have seen a lot of people who move from India. They would stay in a normal apartment as a middle class would stay in. But the moment they land up in Dubai, they want a beach-facing apartment. Or they want to live in the downtown area. Fair enough. Great. I'm not saying don't do that. But my point is, do look at your expenses. You are not coming here just to spend money. You also want to save for your future, right? If you want to hope to retire in a country like this without an earning, right? So I believe those very basic things make a huge difference. You want to improve your standard of living, great. But also look at, वो कहते हैं ना हिंदी में कहावत है, पैर उतना ही फैलाओ जितनी चादर है. I believe that is what basics we miss here. I believe that's the challenge.
Absolutely. You mentioned something which is save for your future. I'm of a belief that no one should save money.
Okay.
Obviously, there's a bit of more rhetoric to it, which is saying that don't save your money, do something else with it.
Fair
so
enough.
I tell everyone that we've been trained. You know, बचपन में बोला जाता था कि बचाओ, पैसे बचाओ, पैसे बचाओ, पैसे बचाओ. 10 रुपए है तो 8 ही खर्च करो, 2 बचाओ. And we've got so ingrained with this thought process of saving money that we are trying to save. We're trying to save money that we don't look one step beyond that, which is the thought is good, the idea is good, but what it actually means is invest your money.
Yes,
right.
Totally.
So do you want to allude to that a little bit more in terms of, you know, what is the importance of investing versus saving? Is there a difference? How should people look at this differently? Why is saving, if you've got my point, why is saving actually not the right thing to do versus investment?
Yes, saving, absolutely, right. When we talk about ki paise bachao, I believe the entire forefathers or our parents basically mean invest. Saving just means that, so you see a lot of people, specifically in the UAE, right? They will have a decent amount of money lying in their bank accounts, which is probably depreciating. With the inflation, you're not making anything. So basically, the value of your money next year is going to be less, right? I believe what we mean by saving is, obviously, you should park out or carve out a certain portion of your income for investment, financial investment strategies, which could be anything. I'm not saying only financial products, insurance or saving product. It could be anything. But basically, you invest this money probably to get a return in the future. That's what I believe investment needs to be done. And you rightly said, it's not save. It's invest. And that is where the real power of compounding comes in.
Absolutely. And even just to, whoever's listening to this, also let them know that even if you are saving your money, you're losing, as you said, to inflation, you're losing 3, 4, 5, maybe 7, 8% a year.
Yes.
And even that is compounding.
Exactly.
Even that, so the losses are also compounding if you're not investing and only saving your money. So just something that I felt is that worked in my favor, that I don't keep personally, my audience know that I don't keep a single penny in cash. I have not $1. Today, I don't know how to, if someone asks me $10, I don't have it, right? Everything is invested. Coming to investments and insurance, right? It's a very, I know that's your bread and butter, but it's a highly misunderstood concept. And there are so many nuances. And I want to share one experience of mine is that I asked someone a few years ago, someone very senior, it was a general manager level who's been doing insurance his entire life. And I met him at a party and I wanted to ask him a few questions just on a social gathering. And he didn't have basic answers to my question. He said, let me put you in touch with someone because he didn't know a few basic questions. I'm not going to get into those questions, but I want you to just share a little bit about why does someone need insurance and why is this insurance and the insurance salesman looked at in a way that is unkind to the business?
So I will break this question into insurance and savings in two ways, right? Fair enough. When I talk about insurance, let's be very honest about it. You need insurance from a protection perspective for sure, right? For example, you talk about insurance, you need motor insurance because you're having a car. Okay, one piece is it's mandatory.
It's mandatory.
Mandatory is only third party. Comprehensive is not mandatory. So obviously you take a comprehensive policy because you love your car and if something were to happen, you park in some money in the insurance so that it funds the cost if it comes to, right? That is basically insurance. Now, if it comes to health insurance, you want health insurance because, again, if something were to happen which you've not planned for, health insurance will come for the rescue and probably save you a big financial dent, right? Similarly, you have a term life insurance. I believe every individual in the universe needs to have a term life insurance. Why? First, that's the cheapest form of insurance you can buy. And what it typically does, and typically for a middle class person or anybody service class person, how does he or she think about their life? Okay, you'll start earning at 22, 24. You will get married some point of time, you'll have kids, and then you'll buy a house and you have kids' education. So you plan somewhere back of your mind, you have this plan, and you also have a plan that I'm going to be working till 55, 60. My income will keep on growing every year. I'll carve out certain money for my expenses, save something. That is you how typically think. But what happens if this person is no longer there? You have your family with you. You probably have your parents. And now your future income is stopped because the person is not there. That is where term life insurance comes into play. And I genuinely believe, and we genuinely believe at policybazaar, that you genuinely need to understand what a term life is. A lot of consumers come to us and say, okay, if I survive, then what happens? I'm like, unfortunately, the product is not insuring when you're alive.
Correct.
It's basically to insure when you're not there for your family to continue living. Right? So if you look at insurance from that perspective, it's very important. Now, when we come to the savings category of these products, now that is where your different goals come into the picture. Savings, as we've discussed, saving or / investing, we'll continue to use these two words, but eventually we mean investing, right?
Got it.
So if you talk about investment through insurance, obviously you need to have specific goals around that. Now, depending on what your goal is, this will come into play. Now, for example, you have whole life insurance plans. Those plans come into play in a way that, okay, you want to leave some money if you're not there, or if you survive, if you are at 99 or 95, you want some assured money to come in. So then whole life plans are very good because they'll give you some money when you at 95 or 99, depending on what tenure you choose. And also it gives money to your nominee if you do not survive, right? So it gives you sort of a legacy built up wealth creation for your family. So I believe that is where we need to distinguish between savings, investing and insurance.
Got it. So can I, just to clarify, so if someone who asked you, oh my God, if I survive, what happens? So your term life insurance is like buying insurance for your car. You buy it, you pay for it, and you hope you don't ever need it.
Exactly.
Correct?
Yes, absolutely.
Right? So is that the right way to describe term life?
Yes.
Okay.
I believe all insurance products are like that.
Exactly. And that's how it should be. You should not, you hope you don't need it.
Insurance is, I believe, the only category where the manufacturer, the distributor and the consumer, nobody wants anybody to use the product.
Correct.
Not that obviously
Absolutely.
You'll have to pay a claim, but at least from just from a hoping perspective, from being well-wisher of everybody, We hope nobody has to use it, but yeah.
But it's something you need to buy
Exactly.
in any case. Now, whole of life insurance. Now, I'm sure you've on social media in your line of business, you must hear it a lot. That whole of life. A lot of financial experts who are offline, not in the industry now, but will tell you do not buy whole of life. Because it's too expensive. There's a lot of fees. The first 2-3 years, nothing goes towards your savings or investments. And if the fund does not make enough money, you could actually run out of money and you might have to put in more money later. And there are so many catches. There are so many caveats. And I today, just on this table, I don't know everything, but I've been telling everyone, stop buying whole of life, only buy term life. Even though I bought a whole of life insurance when I was 23 years old. Someone pushed it down my throat. I had no idea what I was buying. Today, I tell everyone, only buy term life insurance. Use that difference, 80%, and invest it in the S&P 500 or the Nifty or wherever else. You will make far more money than whole of life. The whole of life will give you. Where is the misconception? Where have I got it wrong? Am I right? Do you have anything to add to that?
I believe discipline plays a major role, right? And I believe that is where insurance helps you build a discipline. You're absolutely right. I wouldn't suggest anybody to park all his money in a whole life plan or an insurance plan or in any category of product. I wouldn't suggest anybody to park their money in real estate also, like 100% of their money. Similarly, we would also advise not to park all of your money in a whole life plan. But what a whole life plan does to you is builds a discipline. Trust me, as we discussed earlier, the compounding effect also comes in from a discipline approach, right? And that is where these products help you with. You can speak to a lot of people, and that's a very normal conversation when you speak to people. Oh, I have put in this money. Oh, where have you put in? A friend would ask you. Oh, I've put in here and I get 7%. Oh, 7%, I can easily make 10%. But Did that person make 10%? No. He's been sitting on that money, but telling you an advice that, okay, I could have made 10% instead of you 6%, but he's not done that. So I believe discipline, that is where the insurance helps you. And definitely, as you rightly said, there were products, and I believe the market has evolved in a great way. There were products which had very high charges, and with new approaches from a regulator perspective, I believe that has toned down in a big way. So I believe you need to look at whole life also as a component in your whole portfolio. It can't be the only component, right? It gives you a safety net, obviously, and you rightly said, if the fund does not make enough money, the charges could eat up the fund and you might have to again contribute. Very practical problem. But obviously now the products have improved significantly, and hopefully the way markets are and the funds you choose will save you from that. So I believe if you look at it, it's definitely a need in your portfolio. And also it depends on what stage of life you are at. It's not a great product to start investing probably at, if you have no liabilities and you don't want to leave anything for your nominees or your family, then it's okay, right? So I believe every stage of life you will have different needs, and that is where different products will fit in. And that is where a whole life product will also fit in.
Sure. Interesting. You've heard of a gentleman called Dave Ramsey?
No,
So Dave Ramsey is the father of personal finance. He's someone who's built the Ramsey solutions. He's into real. He does a lot of things, and he's been running a radio show for the last 40 years. Now, obviously, it's moved into YouTube channel, and he is a hardcore advocate of. And he's very abusive and abrasive, and people love him or hate him, right? And I agree with, he helped me a lot. Reading his books and following his podcast helped me a lot. I agree today with him on 50% of what he says, and I disagree with 50%. But it's fine. That's my choice. Not that he's wrong. So I choose to agree or disagree. But he vehemently says that one should never, ever, ever buy whole of life. And he talks about all this infinite banking, and I don't want to get into all of it. But he says just stick to term life and invest money in mutual funds or in S&P 500. But to just conclude what you said is that whole aspect of discipline, that I know personally that I had a whole of life and I've been paying it for the last 14 years. And the only thing I have consistently done for 14 years is every month on the 15th, that amount got directly debited from my...
It brought some discipline to you.
Just discipline, but it's built a corpus now.
Exactly.
It could have been much more, but I would have never invested.
Exactly. People sit with that money lying in their accounts and don't do anything.
Correct.
And that is where everything changes, right? If today you were told that had you done these products only what you've done at a smaller scale for 10 years earlier,
Correct.
you would have been very, very like financially much better off, right?
True.
And that is where I believe the discipline, majority of the people do not have discipline.
Right.
And that's a reality we need to accept. And this helps you do that, for sure.
Just quickly on this topic of insurance, you mentioned health insurance at some point. Now in Dubai, it's mandatory. Every employer, along with the MHID, you have to have a health insurance. Do I need to have health insurance outside of what my job is providing me?
So what happens is typically you might see what type of insurance your employer is giving you, right? See, health is something which you can't plan for if something were to happen to you. Like, and today's age and environment, we are not leading very healthy lives. Like, it could be due to whatever reasons, right? I don't want to get into it because then it becomes a different session and all.
Absolutely.
But what you essentially need from a health insurance is if you have to plan for serious illnesses, because that is where you need really the insurance to kick in. If there are small expenses, you can take care of them, right? So you need to evaluate what type of insurance you have. Second, is your employer covering your family? Because a lot of time employer does not cover the family or the extended family.
Okay.
So that is one thing.
Is that common in Dubai where the employer doesn't cover the family?
Yeah, it's very common because from a regulatory perspective, you don't need to cover the employee's family.
Wow.
You definitely need to cover the employee.
Yeah.
Third element, a lot of SMEs exist, which are probably businesses run by an individual himself. So you need insurance from yourself. So what I'm trying to tell you is, please evaluate what type of insurance you have and also plan for tomorrow. Because insurance, if you want to get into an insurance at a 60 years age when you've retired because now the employer does not cover you, I don't think so it's going to be easy for you to get an insurance at that point of time. Because if you, God forbid, have some serious illness or a pre-existing condition, your premium is going to be loaded so much that you're going to decide, okay, I don't want to take this premium. And then what happens?
Sure.
Right? So insurance is only for unplanned activities or unplanned incidents. So that is where individual health insurance comes into play. If your employer is giving you a very great coverage, probably you can just do some add-ons or some top-ups. Having said that, a lot of individuals here are leaving jobs and becoming entrepreneurs.
That was my question to you.
Right.
Yeah. Okay.
And that is where then you would need that insurance. Or people today are leaving jobs, taking a break and then joining a new employer, right? Basis whatever. So then again, what happens during that time? So there are different needs for people from a health insurance perspective. One piece is definitely have health insurance, specifically in a country like UAE, where the healthcare cost or a hospitalization could really eat your savings. So yeah, that is where health insurance comes in.
Got it. Absolutely. Because my mum just retired and now she was covered for 30 years while she was in a job. Now that she's retired, it's a struggle because now to shell out that money to pay for it is a challenge. But let's say you have to give me advice. I'm 38. Let's say at 45, I want to retire. Let's say, I don't know if I will. But let's say I choose to not be employed 7 years from now. Can I buy insurance today? Will that help me reduce my cost 7 years later?
So what happens is two things, right? What happens is you will go through an underwriting process today. Suppose you're fit and fine. Fair enough. Now what happens is, one, you get continuity on a pre-existing disease. Now if you continue your health insurance premiums, one is now anything, whatever was to happen will be covered, right? Now instead of you buying the policy at 45. Now when you want to buy the policy at 45, for example, if you have any condition, diabetes, hypertension, you declare those conditions. Now, two things will happen. One, you might have a waiting period on those conditions. Second, you will have a loading upfront. Now, obviously,
when you say loading, you mean a higher
premium. So
sure.
You have a base premium and
Got
then
it.
you get marked up by 100%, 200%, 300%, whatever. And then you also might have restrictions on this. But what happens is if you buy a health insurance early, obviously your premiums will still can increase basis your pool's claim experience and everything and your age increasing, but it will not increase as substantially if you were to enter at 45 with a pre-existing condition.
Got it. Perfect. That's something I'm definitely going to look into then, because I've been fortunate to be covered very well and my family by my employers along the way. So I've never had to look at it. But knowing that maybe at even not 45 but 50 or 60 when I retire, and I choose to live in Dubai, I'd rather start paying a small premium now, so that I don't have to pay a exorbitant premium when I'm 60.
Yes.
Excellent. Again, coming back to the fact that we live here in Dubai, we live in a tax-free environment. We live in an environment where the currency we earn is pegged to the dollar. We are mostly from countries that are depreciating against the dollar. Especially like if you look at India, Pakistan, our neighboring countries, even a lot of the European countries now, our currencies aren't doing as well as the dollar or the dirham, and we need to send money back. We need to plan perhaps to retire in our home country.
Yeah.
How do we navigate? There's already so many elements here, right? I've just thrown a few points to you, but this is something that goes into everyone's mind, and then we're like, itna kaun dimag lagayega? How am I going to think about all this? Who do I talk to? And then it's the weekend, it's time to go drink, it's time to go back to work on Monday, and years go by.
Yeah.
There are so many friction points in us starting on our journey to invest.
And in what currency to do that?
What currency to do is, it's like close the book and go. Finish. Chapter closed. No, I'm not going to invest now. Agle saal dekhenge. How do we navigate this entire thing? Can you talk to me about AED, INR, currencies, tax, investments? How do you bring all this together?
Yeah, I believe we've made it too complicated. I believe it's not very complicated. It's a simple thing. The currency you are earning in, your lifestyle is based on that. As simple as that. And insurance is a form of protection. And you need to protect your lifestyle. Now, how do you protect your lifestyle? You need to protect your lifestyle by the currency you're earning in. So today, if you're staying in Dubai, you're an Indian and you're staying in Dubai, earning in USD or AED, because it's pegged, USD or AED, and you have extended family back in India. Let's assume you're the only one here. Your wife and kids probably are in India. So people say, yeah, eventually if something were to happen to me, I'm going to move back, or my family is not going to move here. They're going to continue to live there. So why should I buy a dollar product? Now, my point is you're earning in dollar. You're sending money to your family from dollar to INR. Let's be very honest about it, right? So the lifestyle they are building and the expenses they are building is not on the INR income. They're building it on the dollar income. So simply you need to protect that. I believe we complicated too much. Okay, where am I going to be 30 years down the line, 40 years? How do I continue? Period. The simple thing is you protect your earnings. And that is where the decision becomes. And if you look at it from a simple perspective, for example, you were doing an investment in INR in India and you had sent money from the UAE. So basically you converted AED to INR. I believe 10 years ago, if my memory serves me right, it was about 16 rupees here or there.
Correct. Here or there, yeah.
So if you would have done about 100,000 dirhams and send it, you would have got about 16 lakh rupees. And if I compound it at a 6-7%, let's say in 7%, in 10 years at 7%, it will turn out to be about 32 lakh rupees.
Correct. It'll double in 10 years. Yeah.
Correct. Right. Now, instead, I had just kept this money here, for example. Fair enough. Now, I believe the currency right now is at 23.5, 24 roundabouts. And you had 100,000 dirhams at that point of time. Now it is 24 lakh rupees almost, if you were to send this money. So basically, over 10 years, what you've made is 8 lakh rupees. I'm not saying you've not earned, but now you see the interest rates and everything, probably you've not made enough money. Right? So that is where the power of currency comes. I'm not saying that don't save in your home country and you're saving. Definitely. See, again, it's about a bouquet of products. But you definitely need to also protect your lifestyle basis the income you're earning. I'm not saying do everything and don't do anything in your home country. I'm not saying that. But what I'm trying to say is first and foremost, protect your earnings and the currency you are in. I believe that is the first and foremost message I would want to give.
Absolutely. No, that's very interesting because I'm wondering today, I still see a lot of people who say, I invest money in India. I invest money in India. I said, do you have any dirham deposits? Do you have any dollar deposits? No. Do you have any real estate in Dubai? No. So they have nothing in dollars or dirhams. But they say, no, but I send money. I have FD in India. I have investments in India. I buy stocks in India. And I'm like, in just the last few years, I've seen the currency go from 68, 69 to 85, 86, whatever it is today. And I'm like, you're losing 5, 6, 7% every single year.
Yeah.
So that is something, I guess, it's very important to realize that the value of the currency back home is losing value. But the question is, going forward, do you think that someone like me, who's, let's say I'm a layman, nothing to do with finance, I'm just trying to make a living and save so I have a good retirement, provide for my family, should I be thinking about what's going to happen to interest rates? What's going to happen to interest rate differentials? Is my currency going to appreciate or depreciate? I don't have an understanding of monetary policy. I don't have an understanding of fiscal policy. I don't have an understanding of what's happening with Donald Trump's trade tariffs, and is that going to impact my currency? I don't know. I'm like, boss, I'm putting in so much hard work, working 20, 30 years of my life. And by the end of it, if something like currency depreciation is going to ensure my kids can't live a good life, then what was the point of all this? So how do I prevent all this? What can I do today? Should I say, let me read a book. Let me figure out, is the rupee going to become 100? Then I will not send money. Or is it going to go back to 60 because Modi, India, growth story, sustainable, secular trends, is going to 60 now? What do I do?
See, as you rightly said, a lot of people are saying, okay, we've been investing. Yes, we've been investing in India. I believe that is because they started before they moved to the UAE, right? And I believe at least a financial structure in India is a lot more built from a perspective that you will have a lot more people advising you in India. I believe the banks will reach out to you from that perspective. You will have your financial planners, and you will have enough tools and technologies available from an India perspective who will guide you to invest in INR. I believe in the UAE, if you look at it, over the last few years, you started seeing certain platforms which will advise you, help you on your dollar or AD investments. Before that, I believe there was not much happening. You would typically go to your bank and banker would give you certain products which you will not ever understand. Right? So I believe that is where the challenge was. And the challenge continues to be. What we obviously need to do is educate the consumer first. Okay, as you rightly said, there are people who are investing in India, but they're not doing in dollar. I believe they're still better off than the people who are not even investing.
Absolutely.
Right?
Absolutely.
So I believe at least these people have started the journey somewhere. Now it's about educating them about the realities on probably a currency depreciation and currency thing. And I believe it's a journey that we also will have to take with them. We'll have to continue to educate. I believe the first and foremost is start the journey. And I believe a lot of these consumers have started that journey.
Right.
Now, obviously, you can't plan for a lot of stuff. I don't think so anybody planned for COVID, right?
True.
But it happened, and things will happen in the future. Well, you'll not plan about it. You can't read everything. And I also somehow believe more you read, more you analyze, it's all going to become too complicated at times, right? So keep it simple. Start doing things which make sense to you, which are logical to you. Don't get into too much of, okay, what the world is doing, what the world is saying, but pick up those things what makes logic for you, makes sense for you, and you will typically do well. I believe that is where I keep on telling all my friends, all our consumers, that do things which make sense for you and take the right advice from the people. Also, the advice where you're taking from also makes a huge difference, right?
How do I decipher who is giving me right advice? Now, I'm this guy who's trying to give advice to people, or not advice, but trying to educate people about money. How do people know that they should listen to a Karthik, listen to their financial wingman, listen to a Neeraj? Is Neeraj making money because he's selling me this product? How does a consumer or a layman, a regular average Joe who's working a job, how does he know whose advice to listen to?
So one thing is very simple. Whomsoever is advising you, ask all the questions that you want. Is the person able to answer transparently everything? Is the person able to put everything in writing? See, I'll tell you, a lot of financial planners, if you go to them and you tell them, okay, whatever you're telling me, can you commit it to on a piece of paper and sign it, and they'll shy away from it. Then you know what is happening, right? See, I believe transparency plays a huge role. If you can see things, if the person can show you past record, see, nobody can predict how the future is going to be. If somebody has that, what shall I say, that magic ball where you can generally see the future, then probably he is bullshitting you around, right? So let's be very honest, at least from that perspective. You have your history to be looked at, right? I believe that is what you can look at. And secondly, as I said, don't blindly trust anybody. Just don't trust anybody. Obviously, look at the advice any person is giving you, and obviously look at the credential. Does he come from that background, or that the company does that, has been doing that? And obviously, what the advice is being given to you, obviously dig deeper into it. Talk about it. Take it in writing. And then see how it fares out, right? Obviously, today enough information is available. I believe you have an information overload, right? We are doing this session. There are other sessions available, right? As you rightly said, how does a consumer believe that this session is right for me? I believe two things, right? If we talk logical sense, people will understand it and not use too many jargons and too much expertise. I believe, as you rightly said, a lot of people are very basic from a perspective. They don't understand what financial well-being or financial discipline means. And if we talk to them in their language, probably we'll be able to change that.
Superb. Yeah, I guess that makes a lot of sense because there is a huge need. Mm-hmm. There is a huge need not to understand jargon, but just, as you rightly said, for people to get started, for people to get the right information, for people to leave a conversation knowing that, yeah, I got, someone helped me.
Exactly.
Right. So I think that there is because I felt that need. I was like, where do I go? And if I try and ask a lot of people, you can see people driving fancy cars on the road. But when I found out that person's actually broke and is living from his credit cards, he's living paycheck to paycheck, but he's driving a fancy car, it warped everything in my mind. I'm like, who do I listen to?
Yeah, absolutely.
Who do I listen to? So that's
very, very, very common in Dubai. Very, very common. You can see a lot of people driving fancy cars, but genuinely, if you talk about liquid money or hard cash, I don't think so. If they were having a family emergency, they'll be able to put in $1 million. They might be driving a $2 million car, staying in a $5 million apartment, but I don't think so they'll be able to do that.
That's very interesting because that leads into the next thing that I want to ask you. This is my question, right? It's a personal question. It's not for anyone else because I don't know how many people are in this situation. But I bought my insurance when I was 23, almost 15 years ago, which is now a very small amount compared to the rest of my life. So someone told me, Karthik, you need to buy a lot more insurance for your life. I said, no, I'm going to buy a property instead. So a few years back, I bought one property and I said, this is my insurance. So I paid 20%. I got a property on mortgage and I'm paying it. I'm getting rental income on it. So it's my investment. But today, if something happens to me, I have property insurance. The property insurance will cover that property. That property will go straight to my family. Done. They've got a big chunk of change and I don't need insurance. Do you think my thought process is right? I need your personal guidance because nobody can answer this question for me. And I think it makes sense.
So, okay. So I'll flip this. Fair enough. You're buying insurance because you're not going to use it. Let's be very honest. It's for your family. Now let's understand what the family can do with it, right? Does the family understand real estate? Do they actively manage it? And if you talk about 99% of the consumer, no. The male person or the main person in the family bread earner is managing everything. Although Dubai tells you it's a very liquid asset because it gets sold very fast.
It's not.
But it's not. Yeah. Like, let's be very practical about it. So now what typically happens and I'm talking about majority of the cases that we've seen, and you will relate to that. A middle class family, the guy is earning, the female is a housewife or also working probably, have a kid. And the entire financials and everything, investment, bank accounts were managed by the one person, for example. And that person dies. Hard reality, but that's the reality. Now, suddenly this person was aware of all your debts and all your savings and what payments were to be done at what point of time, right? The other person was not too much aware. Now, if this person dies, you start to realize...
Sorry, is that the case? Have you noticed that this is actually the case in most households?
This is the case in majority of the households.
Please carry on.
Majority of the households.
Please carry on.
And now what happens is a month passes by. First, you have certain immediate expenses. Fair enough. That probably you take care from your family or anything. You have your account, some access to cards, you are able to. Now, suddenly after a month, 2 months, you start to see some debts coming in because people who owe you money or you have certain savings, you might not be aware, but definitely if you've borrowed money, they will let you know you have some pending dues to be done, right?
To borrow money from whom? Like a bank?
Like a bank. It
So
could be a bank.
a mortgage, personal
Could
loan?
be a mortgage, personal loan, could be
Okay,
anything.
okay.
Friends and family, it could be anything.
Okay,
I'm saying
okay.
anybody you've borrowed money from
Yeah.
will let you know you've borrowed money. Fair enough. And anywhere you've invested money will not let you know you have money. Let's be very practical about it, right?
Yeah.
So now what does the family do? Family is not aware of a lot of stuff, right? I know a lot of households because now today everybody is educated. They create a Google sheet, but has your partner or your spouse looked at that sheet? No. Now, why I'm saying that, Karthik, is because you raised the question of I have done it in real estate. Now, the point is you are very, very well versed with managing that real estate aspect, how the flow is coming in and going. You're very versed. Okay, this is the rental income coming in. This is the loan EMI I'm paying, right? Everything you're aware of. But probably your family member might not be. And at that point of time, I don't think so. They need a real estate to manage. They probably need hard cash to manage. Now, if you have that need, what do you do? For example, it might happen that, and if the main person is not there, the family decides to move back. Then what do? You cannot move with your real estate. You can only move with cash. So I'm not saying real estate is not the answer, but I'm saying real estate is the answer for everybody. No.
Got it.
It depends on the maturity of the family. It depends on the understanding of the family and what likelihood is gonna happen if this incident were to happen. Is the family still continue to be living? Because obviously then you need your support system. So you might move back to your home country because you have your uncle, aunts, parents, grandparents, that entire ecosystem or support system which you now need probably to grow up, right? So in those scenarios, then what will matter is, do you have hard money, right? So I believe, as you rightly said, I'm not saying everything is real estate, not real estate. I believe it depends on individual to individual.
Sure, absolutely. That's absolutely fair because that whole liquidity aspect, and I think after a certain point, so if you have your insurance, you've taken care of that, you have liquid investments, you have ETFs, you have mutual funds, and then you have real estate. So you have, as you mentioned, this bouquet of products. You're not stuck with one thing.
Right.
So if one thing goes wrong, you at least have other avenues to back up.
Absolutely.
You have your insurance so that at least your initial funeral costs, all your
Exactly.
initial costs get taken care of. Then the real estate can be there. Rental
Yes.
income, at least the income keeps coming in
Exactly.
every month. So you have, that will be an ideal place to get to, where you have this entire bouquet of products that can protect you and your family while you're alive, and God forbid if something were to happen. That's absolutely fair. Again, coming back to living in Dubai, because the entire financial landscape of personal finance, of investments, of money is very different between India and Dubai because of those three big letters, TAX, right? We have no taxes here, right? This is the reality, but we know that there are a lot of indirect taxes.
Yeah.
And that's fine. We live a fantastic life in Dubai. I have no problem paying Salik. I have no problem paying high rent, because you get that kind of life, right?
Yeah.
You work harder, improve your skills, make more money, and pay for it, rather than crying about it. But we don't have income tax. That means we have full autonomy over what we do with our money.
Yeah.
The minute it comes into our account,
Yeah.
there is no government taking any money. You don't want to take Salik, don't take it. You don't want this medical insurance, don't take it. You don't want this, don't take it. You have full autonomy, right? So nobody decides where my money is going. I get the whole thing. Now I am fully in control. Now I believe this is obviously very good, but it also has a flip side to it. That now I am fully responsible for my financial destiny.
Absolutely.
How does taxes play a role in, or not having income taxes? How does this improve or deteriorate our lives?
I believe, see again, right, it makes a lot of difference to individuals. So, okay. So if you're not paying taxes, obviously, as you rightly said, I am in full control of the money. So whatever your salary is, that exact amount hits your account, right? So a lot of people would not be even aware, who've been living and born in Dubai. They might not even know, okay, if a salary says that your salary is this, that amount is not hitting your account because some taxes are eating that, right? But having said that, I believe, see, what you essentially mean is not the taxes, but also the flip side of it is pension plans or savings, provident funds, as you call it in India, right? I believe here also the government is now talking about building that pension plans. See, that again helps you build a corpus without you knowing. I believe income tax is a very different topic from a perspective that income tax should give you the right infrastructure, probably the right facilities. Now, if you go to the Western world, now some people love paying income taxes there because at least their education is taken care of for the kids, right? Here you have to fund everything from your income. And I believe it also makes a difference on the different segments of people where you are at. Now, a person who probably earns upwards of 100,000 dirhams a month, he's at a very different stage of life where probably taxes make a huge difference to his life because he was paying a major chunk. Now, a person who's at a 10 or 15,000 dirhams, for him, it's a very different proposition. For a person who's earning 25,000, it's a very different proposition, right? And then you start to evaluate by paying taxes, what facilities do I get, right? If you look at UAE, specifically Dubai, I believe education is not very cheap, right? The different services are not very cheap. But obviously, you're not paying taxes, as you rightly said. So you have enough money to pay and you can choose where to stay. But having said that, I believe the pension bit is the real bit which makes a difference from a long-term perspective. It's not the taxes which really make a difference, at least from an Asian subcontinent, because where you pay taxes and you are not getting schools to be free or college to be free or your healthcare to be free. In India, obviously, healthcare at least somewhat has started to become a government scheme for at least the senior citizens or below certain income levels. But having said that, you're definitely not getting certain benefits. And in UAE, at least you can then decide what to do with your money.
Sure. So how do I replicate this whole pension program? How do I get a pension?
I believe you have those savings plans available in insurance, obviously, which can build you an annuity and a pension plan. I believe you can definitely look into it. I believe the regulator in the UAE also is looking at that perspective because you have some sort of a gratuity, right?
Yes.
If you look at UAE, there's a gratuity amount which a company needs to account for, needs to pay you once you leave the company.
So how is that different from pension?
It's in somewhat not very different.
Okay.
Not very different. The only difference is pension. Basically, if you buy a pension product, you're contributing to it and it is earning certain interest. As of now, the gratuity, whatever corpus you're building, is not earning you interest. So that's a difference. But having said that, in some form or the other, eventually gratuity is helping you build a corpus. Pension is eventually helping you build a corpus.
Got it. I think we've covered, a broad smorgasbord of topics. Do you think in anything we've discussed, is there anything else you feel is pertinent? Because I have two difficult questions, tough questions that I want to ask you, which I don't know whether you'll be prepared to answer or want to answer, but I'm going to ask them to you anyway. But anything you'd want to add to sort of bookend this conversation that we've had? I want to do a rapid fire with you so that it's fun for the people who've stayed back and are still listening. But anything you want to add before I get into those two tricky questions for you?
So one thing I want to tell all the listeners and whomsoever is watching this show is start. Please start. Whatever you think is right for you, start. Do not delay. Do not procrastinate that you will do it over the weekend, tomorrow or day after. Please don't do that. I am sure you had a eureka moment where you thought that, or in hindsight, I would have done this 10 years ago. I would have been a different bank balance. I would have afforded a bigger house or driven a bigger car, or I could have sent my kid to a better university. So my point is, please start. And I tell everybody I want to tell that, please start. I definitely want to tell that.
Excellent. Great message. Thanks for that. Are you ready? I'm now going to actually put you in the hot seat.
Let's see.
Right.
Go ahead.
I'm going to start with the easiest of the lot, or perhaps something which is not so tricky. Is there space for Bitcoin in the world of insurance?
See, in the space of insurance, now if you're talking about is Bitcoin could be one of the products as an insurance product to probably save you from volatility, I don't think so. I don't think so as of now, right?
So let me rephrase that question.
Yeah.
There are talks about adding Bitcoin to pension funds, to insurance funds, to even government treasury bonds. But they say let 1% be backed by Bitcoin, because in the long run, this is what some experts are saying. I'm still reading about it. I'm trying to figure it out myself. But when I heard this, my mind was blown that there is something like this could be a possibility, because at some point people have some crazy predictions. But do you see someone is talking about doing a Bitcoin insurance?
See, I believe it will become a reality. Why it will become a reality? Because for every type of consumer, different things make sense.
Sure.
That's the idea, right? If everything made sense to everybody in the same fashion, then you will not have so many products, right? Why would consumers be investing in different set of products? Because every product makes different sense to different set of consumers. And that is where there are people who are investing in the crypto side. There are people who are invested in Bitcoin. So why not create a product for those people?
Sure.
Right? That it's more of a demand and supply, right? If there are enough consumers who are talking about it, there will be a supply of that product.
Perfect.
Simple.
Excellent. The second thing is, do you think that insurance and savings products should be clubbed, or should they be kept separate? I mean, I've been tom-tomming about the fact that keep your buy insurance separately and buy your investment product separately. Am I right when because today there, with tens of thousands of followers, people are listening to what I'm saying. People are calling me so I want to know that I also have the best and the right information, and who better to get it than from you. So do you think this is good advice that I've been giving people? Because now it's a good time to correct it, that keep your insurance and your investment separate.
So I believe so in a way, yes, and in a way, no. Now I'll correct it how I believe that. If you're looking at a term life, if you believe that you need money only when you die and your family gets some money, don't club it with anything else.
Super.
What I mean by that? So for example, term insurance also has a form in which you get return of premium. What that mean is, you buy a term life insurance and if you survive, you get the premium which you've paid back. But there's a catch. The premiums you might pay is 4 or 5 times. Now, which essentially means is, you instead of $100, for example, you're paying $400 and you're not getting any interest. So just pay $100 for a pure play protection. If nothing, if you survive, this money is gone. So that is where I say that don't mix both the things in that way. Now, for example, as I again mentioned, you want to build money or a corpus if you survive at 99. What do? Probably that is where whole life comes into play, right? Look at whole life from a savings perspective then. Okay, it has an added benefit where if something were to happen to you during that time of the policy, there is a lump sum amount which your family gets. Fair enough. But you need to be very clear, are you saving it from a term perspective or from a saving perspective? So your objective needs to be very clear. Don't club both the objectives in one product.
Superb. I think that's extremely helpful, because anyone who's stuck around and is still hearing, I think this is very important to realize that it's personal finance. It's personal to you.
Exactly.
You need to assess. And I think the bigger point is that take time to think about these things that we are discussing. Don't take everything on face value. See how all these things that you have mentioned, how they apply to my life.
Right? As you rightly said, it's personal finance. It's not friends' finance or neighbors' finance.
Absolutely.
So don't I'll tell you, the challenge is when it comes to money matters, a lot of times you take decision basis what your friends have done, and you see probably people who've done well. And that is where you take a decision on. So which, as you rightly said, we should not take every advice on the face value. Do your own research and basis that, see what fits you.
Perfect. And now here's the question for you, which is, do you think that the incentives of the industry, insurance, investments, the incentives of the industry are aligned with the incentives of the layman? Because purely from a layman's point of view, I feel, and I've got this sense a lot. And as someone who's trying to make it in the world of content creation in personal finance, I have decided that I'm not going to accept money from anyone for selling something that does not belong to me. Because I feel like I don't want anyone to ever feel that I am selling them something and making money off them. I'm very cognizant of this fact because that's how I feel that most people feel about the industry of investing and insurance. A, do you agree with me? And do you think the incentives of the insurance and investment industry is aligned with the common man?
For a greater or the maximum amount of time in past, yes, you could be right? Again, I would leave the insurance bit aside and the savings bit separate. Fair enough. When I talk about pure protection, pure term life, pure health insurance, pure car insurance, I believe there's obviously a distribution fees because you need to distribute these products. You need the reach to happen. You need these people and the experts to reach out and explain, right? Now, when it talks about saving products to the maximum amount of time, you're absolutely right. The incentives are misaligned. See what used to happen. I believe the products were created not with the consumer in mind, but the distributor in mind. Can the distributor distribute my product, right? And over a period of time, the regulator as well as the manufacturers, and I mean the manufacturers as the insurance company, has understood we need to start keeping consumer in the center of creation of product if we want to have a long-term vision. And that has started changing. So if you look at products today, they're much better. Could they be better? Definitely. Everything could be better. But would I say, are the interests misaligned too much? I wouldn't say that. Again, as I keep on saying, if when it comes to pure play insurance and savings, both are very different propositions. Obviously, savings comes in the part of insurance also, but your objective needs to be very clear. And I wouldn't say to a larger extent, it's misaligned. As I mentioned, from an insurance perspective, at least, we've harmed ourselves. Because we've really taken consumer for a ride, and I believe that is changing, and it'll take some time for the consumers to start realizing that.
Fantastic. Good. I'm really glad to hear that, and I hope this message goes out far and wide. That it's don't just depend on someone else. You first do your own analysis,
Yes.
and then you'll be able to find someone or allow someone to help you. Don't just listen to what everyone has to say. Do a self-assessment. Figure out where you stand on your own journey. What are your goals? What are your objectives? And then you'll be able to find the people who can help you and the products that can help you.
Yeah, it's almost like buying a mobile phone today. You do your research, right? I am very confident anybody who's buying a mobile phone today does his research. And he could be an Apple hardened fan, but still he would do his research on which model, what feature. And so my point is, why wouldn't you do that research with your money?
Absolutely.
Why would you just blindly follow somebody?
Absolutely. Fantastic. I want to do a quick rapid fire.
Let's go for it.
Whatever, we'll see how this goes. Question number one is, can you give me a thumb rule to calculate how much insurance I should buy?
So thumb rule would be obviously whatever debt you have. So for example, you need to cover that. And I believe next 5 years of income.
Next 5 years of my income. Got it.
I believe that would be the thumb rule. I would say that you need to have at least that much insurance.
Perfect. Number two, term insurance or whole of life insurance? If you had to pick one.
If I had to pick one, term life.
What is the most highly recommended book for you? If you had to recommend to the audience that one book that everyone should read.
Yeah, I don't read too much, to be very honest.
Fantastic. So any video or what should, okay, then let me rephrase that question. What should someone do? What is the one thing that someone can do to further their cause in their own journey towards building financial freedom?
I believe you need to definitely understand and read a lot on things, basic things, right? Basic things when I talk about is and I'll be very honest, it's simple maths. Talk about how does compounding work? How does saving early works? I believe those are the basic things. I typically, a lot of people tell me which book I should read or which financial expert I need to follow. My point is, buddy, first understand the basics. Do you understand what you've lost by just procrastinating it for 1 year? If you had put in this money, invested somewhere, the market should have given you XYZ return. And that is where I believe people need to start.
So basically what the CEO of policybazaar.ae is saying is follow your financial wingman. Yahi to baat karta hu main. Anyway, so the next question is, what is the most exciting thing that's happening in the world of fintech and personal finance right now?
Yeah, I believe a lot of personalization is going to start to happen. A lot of small ticket size things are going to happen, which are going to be very personalized for you. I believe if you look at from a personal finance perspective, right now, it's not very easy to do different products in different geographies from one place. And if I were to talk about, or my dream would be, I could be sitting anywhere and invest anywhere. I believe that would be one piece which could, if were to happen, that will be very good.
I look forward to that happening because right now I'm all over the place and I'm so, I'm trying to consolidate everything. So that will be great. What's the best financial advice that you ever got?
So one advice I keep on, I always remember two things I would say, not one. Like one was from my father, obviously. He used to tell me, you do not build your expenses basis your income. You build your expenses basis if you don't have an income tomorrow. What that mean, right? It'll be very confusing. So what that means is, so you obviously, when you start your job, you build your expenses basis the income you're getting. Now you get a promotion every year. Your incomes are increasing. And you suddenly say, okay, my incomes have doubled. My expenses should double. Why? Are you going to start eating double? Are you going to start wearing 2 pairs of shoes? Are you going to start using 2 cars? No. So my point is always build expenses in a way that this income is not there tomorrow. Obviously, you need basic living expenses. You're going to eat, you're going to drink water, you're going to stay in a house, rents and everything. Obviously, they stay as it is. But don't start piling up on expenses basis your future incomes.
Amazing. I think that's phenomenal advice. This is what I always say, that don't fall for lifestyle creep. Exactly. Every time that you keep progressing in life, but if your expenses catch up, then you're doomed to fail.
Exactly.
Because at one point your income will stop, but your lifestyle needs will remain the same.
Because you start to build on debt basis your future income.
Right.
And that's a trap you want to avoid.
Absolutely. Superb. What's the worst financial advice you ever heard?
See, by the time we started really getting financial advice, because the bankers thought, okay, he is a senior enough guy I should give. I told him I'm from an insurance industry. Then he would shy away from giving me any advice. Okay, sir, then you know everything.
Perfect. So, basis your profession, you've avoided a lot of bad information.
Yeah, I keep on telling people, I am from this company. Oh, okay, sir. No worries.
Okay. No worries. Fair enough. Amazing. So all those prank calls that we keep getting all day, I know the perfect answer. And I'm going to start using it now. Good one. Thank you. Guys, I gave you all the solution. Okay. So how do I know that I am doing well financially? Can you give me 3 signs that if I had to look in the mirror or write down, if I'm doing this, this and this, that means I'm doing well financially? Can you give me a litmus test? 3 things.
Okay. 1, your expenses, whatever you have your expenses, can you pay them if you did not have an income for next 6 months? That is, and
so
through your liquid assets.
So emergency fund.
Through your liquid assets available, not by selling your house or selling something. No. I'm not talking about that. The liquid assets, it could be some FDs or something. I consider them to be very liquid asset. Can you pay your expenses for 6 months? As simple as that. Or probably 9 months, 12 months. Second, whatever money you had as a corpus, is this more than the last year? Is it more than the last year?
Super.
Fair enough. I know you can't predict the future, but obviously you can look at the past.
Correct.
But last year I had this much of corpus. This year, do I have more than that? Have I contributed to more? Right? I believe if you're doing these 2 things, at least you're on the path or you're on the journey of being financially well off. Or personal finance are sort of sorted.
Perfect. Excellent. The third one, let me add the third one. The third one is that start paying off your consumer debt.
Oh,
that
I never have understood why would people take consumer debt. Like consumer debt, I know. I don't want to harm any industry from that perspective. But I don't know why people would take a loan to buy a mobile phone. Dude, you probably cannot afford that. Let's be very honest. Don't buy a mobile phone. You have to take a loan for a mobile phone. I understand you have to take a loan for your probably car. I do understand. But anything other than that, taking a loan to buy a fridge, taking a loan to buy a TV, taking a loan to buy a washing machine, taking a loan to do a holiday, I don't understand that.
Getting married? taking a loan to get married?
I don't know.
So shadi, I say you're
You
taking
are
a loan for a wedding, but you have no money for your marriage.
Exactly.
So,
Totally.
So
So I'm
basically-
with you. Yeah.
So stop buying shit you don't need with money you don't have to impress people who don't care.
Who don't care? Exactly.
Or you don't like, right? Good. So I think I want to ask you one last thing. If
Yeah.
your kids, who I believe are still, in single digits right now, you have 3 kids.
Yes.
If they are watching this when they are 20 years old, right? What is the one financial advice that you hope they have inculcated, or one thing that you want to tell them if they are watching this when they are 20?
I believe 2 things I would love my kids to follow is, one, never ever run after money. Build and run after your passion, whatever you want to do. And hopefully, being my kids, they will have some sense of financial understanding on saving early. And I hope they do that. Yeah.
Amazing. So kids, if you're watching it, आपके पास बहुत पैसे हैं, tension मत लो, ख्वाबों को follow करो. Excellent, Neeraj. Thank you so much. I've had a blast. I've got a lot of my answers for the questions that I've had, and I hope the audience has as well. Thank you so much for taking the time, and I hope we can do part 2 of this at some point.
No, thank you, Karthik. It was very engaging conversation, and I believe we were able to help your listeners and audience in general get some answers, and hopefully we continue to do this.
100%. Thank you so much, and we'll catch up soon.
Thank you.
Thank you.